Well, so part of this is going to help you understand and use a tool that we use, and I use this every time I go teach, but a tool to get more out of those earnings calls. So it's not just something that we can listen to and the analysts are saying and have a great time or early or late one afternoon, maybe even on a Friday or Monday morning, but how do I use that information out there? Okay, so about 90% of us, this is the first time. Awesome. There's a bunch of us. So welcome. Appreciate you being here. So now let's jump into this and let's think about your own personal experience. When was the last time that you personally listened to an earnings call? When was the last time that you listened to an earnings call? Halfway there. Good. Would rather go to the dentist. So far, only a couple of us would rather go to the dentist than listen to an earnings call. Now, as you've answered, I want you to, in the chat box, why do you listen to earnings calls or why not? Why haven't you? This year, about 40% of us have listened to an earnings call this year. 29% of us have never listened to an earnings call. That's about average what we find, have never listened to an earnings call. But why or why not? In the chat box, just get the analyst highlights. So Derek, you're listening for the Q&A. We'll talk about that and why I think that's important as well. That's excellent. Why else? Why else? Or why not? So we've got a bunch here. Let me just go find a couple. Get the analyst Q&A. Have them tell us what's important to analysts, or excuse me, to the investors, financial health, stay in the know, lack of understanding. That makes it tough, right? We use a different language in finance. You know what we call that in the finance industry? We call that job security. You may own stock in a company or a competitor. That's why you want to do it. You may want to educate yourself. Hey, am I getting a dividend? Does this company pay a dividend? Sometimes it's easy to get a transcript. Like for analog devices, they actually publish a transcript. Sometimes it's easy, sometimes it's not. Look at the future plan. Oh, future plans in the direction of the company. Yeah, that's an important one. You're more on the technical side of things, so maybe not understanding all of the language. You want to build your business acumen. It's a great time. Timing is off. All right, so there's a lot of reasons why we do or why we don't listen to an earnings call. Some of the things, though, as you're looking at an earnings call, we do talk about the direction of the company, where our company is going, where this company is going, but we also talk about performance. So how is strategy? What is it doing for the company? What direction are we taking? What are the decisions that we've made? And then we also talk about performance. Where have we been? Where are we going? Now, for those of us that are looking, hey, I've got so much other stuff. I don't understand the language. There's a big gap between what they're talking about and the market and analysts and all and C-level executives and what I do on a daily basis. That gap just seems too big. Hopefully today, in the short hour that we have, I can give you some tools and tips and tricks that I've used to get more out of them, but also have you see why it's worth it to spend the time. To really, I see it not as just a spend, but it's an investment of your time and will therefore pay off as well. Now, there are a couple of things to think about. With these earnings calls. First of all, in general, not just with earnings calls, but in general, 95%, this is from Harvard Business Review, 95% of employees don't understand the company's strategy. We just said, hey, one of the reasons why I listen to earnings calls is to get that strategy, that story. Where are we going? 95% of people don't understand and don't have that connection. And here's another thing. We talk about not just strategy, but performance in these calls. So how have we done? What decisions have we made? And what are the results of those decisions? Well, 90%, and this is our experience over the last 20 plus years, most people don't understand how we measure success. So we don't know where we're going. We don't know how we measure success, which means we don't know if we're making progress as a company altogether. Now, as you think about those two big challenges that most people don't understand where we're going or where we've been and the decisions that we've made, now imagine you're a CEO like Vincent Roche. You're in this industry, semiconductor industry that supports every industry out there. You have over 75,000 products in your portfolio and over 125,000 customers. So you're making decisions that impact your product portfolio, your customers, and the way that they're running their business. You also have a global organization with over or around 26,000 employees, and most of them don't understand where you're going, where you're headed, what you're trying to achieve. Like if you're looking at business as a bowling, they've got bumpers and they're not even looking in the same lane. And they don't know where we've been. They don't know the score. They don't know the health. They don't know this where, what success looks like for us. And one of the things is you look at a very rapidly changing business environment and a very rapidly changing industry with a lot of disruption. And you're looking at things like AI and quantum computing and IoT and all Internet of Things and all of those things going on right now. What would you want shareholders to know? By the way, analog devices and the semiconductor industry has seen one of the biggest downturns they've seen in a long time just recently. So what would you want your shareholders to know? Not just your shareholders, but really all stakeholders. What would you want your customers to know? Yeah, future's good. Yeah. What about customers? What about partners? What do you want your partners to know? Suppliers, vendors, other strategic partners that you have. And then knowing that 95% of your employees don't understand the strategy or the scorecard, what do you want employees to know? You want employees to know. So a couple of things. I appreciate the thoughts coming in. Hey, strong balance sheet, bright future. The future looks good. Stick with us. Have that patience. Hey, we're still funding R&D, and they are. Downturn is ending, so we're performing well. Future outlook is good. There's only tailwinds behind us. Excellent. We want to project optimism. We want people to know that we're positioned well, that we're making good decisions that will build value for them, whatever stakeholder bucket you're in, whether you're an employee, whether you're a shareholder, a customer, or a partner. You want them to know that we're going to be around, so have confidence. Now, here's another way of thinking about it, just for my own kind of building my own business acumen and kind of the way I want you to think about it. Remember, these earnings calls, we've just seen this. One of the reasons why we listen to earnings calls is because we talk about the story. We talk about our strategy. We talk about the decisions that we're making right now that are going to shape the future. And we also talk about performance. What progress have we made? What are the decisions we made to have the results that we're seeing? So we know where we're going. We know where we've been. Now think about it from your own perspective. If you know where you're going, and you know where you've been and you know the decisions that you've made, now I can see the decisions. Well, okay, I've been here. Here's where I want to go. Now I can see more clearly the path that I need to get there. And that's why I can say with certainty that my guarantee to you is as you listen to earnings calls and build your business acumen, it's going to build your credibility. You're going to be able to start seeing around the corner and anticipating what's going to happen next. That's going to build your influence in any organization that you're in, which builds your career and ultimately drives results for the company, the organization that you work for. So again, my guarantee to you and my challenge to you, listen to earnings calls. Get as much out of them as you can. Make it a commitment to yourself and a regular investment in yourself to listen to those earnings calls, because it will help you personally and it will help the organization that you are in. Now, we have this tool, and part of my objective today is to help you understand how to use this tool so you can get more out of our earnings calls and out of the things there that are available to you, that all of that wealth of information. And in this tool, we suggest you do three things. First of all, you've got to prepare. You got to get everything you need. You got to have your notes. You got to have all the stuff, all the materials to be able to analyze, which is the second step. But it doesn't stop there. Remember, we want to do something with this information. So then we've got to think about, how do we apply this? So as you prepare, let's step into this. A couple of things that you should know. If you've never listened to an earnings call, and almost a third of us have never listened to an earnings call, generally you're going to find an earnings call in two parts. The first part are prepared remarks. So if you go listen to an earnings call, you'll have the operator come on, you'll have someone from investor relations come on, and then introduce an executive. And it sounds like they're reading a script, because it is a script, because they have carefully crafted those remarks to give the exact message they want to give. That's important. That's important, because now we can look at those prepared remarks and really try to understand and read between the lines about why those messages now. Then the second part is the Q&A, and someone mentioned this in the chat box. But as you read the Q&A, here's what's happening. Analysts are taking those prepared remarks. They're also following several companies within the industry, so they know the industry, and they're building out their own model. So they take the prepared remarks, they compare it to the model that they've been and their experience that they've built into their model, and then they use the Q&A to kind of test the assumptions that they've made, as well as the assumptions that the executives have made. And they're saying, okay, does this really hold? You say you're filled with optimism about the second half of this year. Why? Here are some things going on in the market, right? You've got raising interest rates. You've got geopolitical unrest. You've got elections within the United States and the impact that has. You have all of these things going on. How can you be optimistic about it? And what are you doing about all those things that you can control? So they're using those Q&A as kind of testing, right? Trying to poke holes into some of the assumptions, which can be important to us, because now we can understand, like someone else said in the chat box, now we can understand what the market's concerned about. And if I know not only where we're going and where we've been, but also what the market's concerned about, now I can do something about it. So you've got the prepared remarks, you've got the Q&A. Then what you're going to want to do is you want to go grab all the materials, right? So a couple of things. First of all, go locate the call or the transcript. So one of the best tools is just search. And so for analog devices, I literally went out to my search and said, analog devices IR. IR stands for investor relations. So if you do that, typically one of the very first results is going to be the investor relations page of the company you're looking for. So don't underestimate that. Some companies do have a transcript while others don't. Now, if that company doesn't have a transcript, you can just search for, again, analog devices Q2 2024 earnings call transcript. And sometimes you'll get there. I find a lot of luck, and I'll put these, we don't have any affiliation with these. But Motley Fool, I think that's at fool.com, is one source. Seeking Alpha, I'm putting these in the chat box. You don't have to try to spell them. I've had luck with a couple other ones that Cap Edge is one of them, and the other one is TIKR, ticker.com. So those are other resources that I use. If I can't find them in search, those, especially if you're a US-based company, have a lot. Now, Seeking Alpha, Cap Edge, Ticker, those are all freemium sites, so you might have to register to get access to those, but I generally have good success with at least one of those to find the transcripts, and those are resources that I've had. Now, one of the things, you're going to make this, again, a commitment to yourself. So review your notes. And in fact, I had to do that specifically with analog devices. I had to go back and figure out what's happened in the past to make this quarter make sense. So have your notes together. And if you've got them all together, awesome, perfect. You're going to see a lot of things. You're going to see the evolution of the story and the evolution of those decisions. And as you do that, again, you're just going to build that muscle and it'll become more and more intuitive to you about how to apply this, what this all means, and what can I do about it. Again, building your influence and credibility, your career, as well as the results of the company. Then lastly, now this is important too, meet with your team. I can't stress this enough. Meet with people in your function, meet with people outside of your function, use it as a networking. I've got a coworker that has been in sales for most of his career. I've been on the finance side of most of my career. And so I think one way, I think that's the right way. And then I go talk to my coworker and he thinks another way and sees it in a different light. And we build each other's perspective. And that's helpful as well. So meet with your team about it. So once you have all of your materials, now let's jump into the analysis. And this is where we're going to spend the bulk of the rest of our time together. Now, part of what you're doing and part of what we've said is I've got to decipher a different language. It's something that maybe I'm not in every day. If you've been to one of our workshops, you know this model. This is our 5 business driver model. Now, what this does, cash, profit, assets, growth, and people, what this does is it puts into perspective the fundamentals of the company. And we're super confident. We know this model works because as you look at the model, it mirrors really well what we're analyzing in the financial statements. So I see the model. That's the story of the company. The financial statements, that's just how we're measuring. It's the pictures to the picture book. So how do we measure that? So let me give you a couple of examples. And by the way, make sure you grab our tool because as you go into the tool, it has each of the 5 business drivers. It has the definition. It also has examples. So it's things to listen for as you go through that. But let me just kind of really quickly describe to you this model. Now, cash is the primary sources in any business. You want to start a business, you got to have cash. You want to grow your business, you got to have capital. You want to maintain your business, you got to have capital. And you need to think about it in 2 ways. Your savings account and your cash generation, your cash flow. So what capital do I have right now to do anything I want in, whether that's invest or whether that's save it or whether build the business or return it? What capital do I have right now? And then what sources of cash? Hopefully I'm generating enough cash to be able to fund my operations, fund investments, and secure the financial position of the company. So that's cash. Got to have it, got to generate it. Profit measures our ability to make good business decisions. So it measures what's coming in from our customers, our revenue, minus what's going out to run the company. If there's a surplus, that's profit. Profit, income, or earnings mean all the same thing. Means there's a surplus. What's coming in is more than what's going out. And that's a good place to be. That's how you build a sustainable business. So I want to be profitable. And we're going to measure profit both in dollar as well as percentage. So the currency as well as rates and percentages. I'll talk a little bit about that as well. Finally, assets. You're looking at the 3 main financial statements. Assets, that's the strength of the company. You got to have assets, but you also have to use them. So you've got to balance your financial strength with the return that you're earning on the investments that you've made. Growth is what all stakeholders want. It's good for shareholders. It's good for customers. It's good for employees. Executives get measured by it. Growth is good for all stakeholders and what's ultimately what we all want. And people are at the center of any company. Unless you have customers, it's a really expensive hobby. Unless you have employees doing the work, it's going to be really tough to be as profitable. It's going to be tough to grow. It's going to be tough to get as much out of your assets as you want. So you got to have people. And again, in this tool, it has the definition, it has the examples, things to listen for. Now, here's how to use it. When you listen to the earnings call, what you want to do is tabulate, count how many times the executives talk about each of the 5 business drivers. And then on the right side of the page, there's some questions that help you get between the lines. So let me show you what I mean. Now, I'm going to go back again. One of the things you want to do is review your notes from the past. So I went back to the Q4 earnings call, and here's an example of how I might read Vince's comments. So in summary, we're proud of another year of record revenue and earnings. Now that's important. This is record revenue and earnings. By the way, that's profit. We continue to demonstrate the power of our business model. That's going to become important too, some foreshadow here, right? We continue to demonstrate the power of our business model, which delivers results. Typically, when we talk about results, we're talking about revenue and earnings through all phases of the business cycle. Again, important. We want to have a business model that's going to drive results through all phases, ups and downs. So we want to take a look at that. Our continued strong investments. Now, you might read investments as a capital thing. Like, hey, you got to have cash to do what? To invest in technology and business innovation, which I read as assets and growth. Part of that business model is also customer engagement. So we know where to invest. And our hybrid manufacturing model, again, that's about fulfillment and delivery. So that's another assets story. You see that there. So far, we're looking at all 5 of these business drivers, and this is his summary remarks. All of that business model positions ADI, Analog Devices, and our customers to take maximum advantage of the opportunities at the intelligent edge when the business recovery arrives. So you can see how those 5 business drivers, we can categorize messages in these prepared remarks. Remember, this is the carefully crafted communication that executives want us to hear. So we've got to understand that and then read between the lines. But the 5 business drivers can help us do that. Now, again, I want you to set the stage here with the Q4 earnings call. We already know that there's a downturn because this is coming into by the time we release these remarks, we've got another 30, 45 days under our belt, and we can see what's going on. So now here's Analog Devices saying, hey, we were coming off of a great year. We're seeing a downturn, and what's going to get us through that downturn is this business model. Our business model is centered around making strong investments in technology and innovation. That's a long-term strategic initiative. Customer engagement, long-term and short-term, and then our hybrid manufacturing model, the way that we're going to deliver and fulfill. Again, long-term and short-term. But that all positions us, or ADI as a company, and the customers. So there's, again, that customer centricity is going to be important to them. That positions the company well to be able to take advantage of business recovery. So now the question is, given 2 more quarters, where is Analog Devices? Are they making progress using this business model to be able to drive those results? So the first thing we're going to do is look at the message, the strategy. Where are they going? How have they been? Give us an update on that business model that you find. So we're going to do this a couple of ways. We're going to look at it with Vince's remarks, the CEO remarks. Then we're going to look at where the analysts are focused to get kind of a total focus. So here's what I read. Again, you may read this differently, and that's going to build some really good perspective. So if you are in Analog Devices or familiar with Analog Devices, would love to hear what you thought. Prepared remarks, I found the biggest focus on assets, followed up really closely by growth. So, okay, assets and growth, talking about position, financial position. We're talking about that hybrid manufacturing model. We're talking about the investments that we've made. And so how are those providing the return? How does that position us for growth? And then you can see profit and people follow behind that, or people and profit. Again, some of that customer centricity. The analysts were mainly focused on growth. Profit was right up there as well, and then assets and people fell behind. Not a whole lot on cash. My perspective on that is that Analog Devices has done well generating cash, investing their cash, and returning cash to shareholders. That's not the concern. The concern is a recovery and a return to growth. So with all those investments that you've made, where's the return that you're getting? Tell me about that positioning and how that strengthened you so you can make it through the recovery. So here's our focus, assets and growth, number one. Now we talk about the questions and try to read between the lines. So the first question we're going to ask, what drivers seem to get the most attention and why? So what driver seemed to get the most attention and why? And let me give you an example of the comments here. Vince, with Q2 now behind us, we believe we've passed the low point of this cycle. Remember, Q4 said we've built this model to take advantage of every part of this business cycle. So now we've passed the low point, meaning everything's going to be great from here. Not great, but we're going to start picking up momentum from here and see some growth. Our growing optimism remains guarded, however. So even though we're optimistic, like, hey, look, we've got to account for a couple of things here. Short-term economic and geopolitical uncertainty persists. Okay, so what are you doing in face of that? As such, we will continue to manage the near term with great discipline as we fund and execute against our longer-term strategic priorities to drive increasing levels of value for all of our stakeholders. Okay, at the end of the day, we're trying to build value for all of our stakeholders. We do that, again, investing in technology and innovation, being real close to our customers so we engage with them deeply and understand where they're going and anticipate their needs. And we have this hybrid manufacturing model that allows us to fulfill and be flexible. In the meantime, this may mean we need to make some tougher near-term decisions. Great discipline. So how do we do that? That's around maintaining a strong balance sheet. That's around maintaining good cost discipline. So how do we manage costs, make sure that every dollar we spend has at least $1 in return? That's kind of the message here. Overall, what drivers seem to get the most attention? Well, we saw assets and growth tip top right there, 39, 40 times mentioned by both Vince as well as the analysts. And we're talking about some of the messages here. Why are those two things important? Because the assets, that business model is positioning the company for growth. It's delivered returns in the past. It's doing well for the company right now. And it positions the company for long-term accelerated growth. Couple of things and examples that Vince goes on in his prepared remarks include the strong portfolio of products. And it's not just about having a portfolio of products. It's about what they do for customers. So every time he mentions an end market and an example of a product of an end market, he's also talking about how that impacts the customer. Not just because it's a great product, features and benefits, but here's the benefit to a customer. So if I'm a customer listening to this call, it's like, oh, okay, yeah, either I've seen it or I can see how that can help me. I want that. So it helps us see where there's short-term and long-term demand for those products. And again, proven that they've done it in the past. They're doing it right now. They'll invest in the future. So one of the questions, now, one of the things that we should say is, all right, show me the money. So if you're doing that, is that really happening? And so you should be getting this story. And one of the questions that we'll ask is, all right, do the numbers really prove that true? So that, great story. Does that really prove out in the results that we're looking at? So question number one, what driver gets the most attention and why? Assets and growth. We want to grow. We need the assets, the business model to be able to do that. With that, what are a couple of the main points executives are trying to make? Well, I pulled out a comment from their new CFO from February. He was just hired and just started February of this year. As he's looking at the company and assessing the company still, he says this. He says, no doubt cyclical transitions can be challenging. Yeah, of course. And you'll see those in the numbers. But they also provide opportunity for outsized business acceleration when approached from the balance of fiscal discipline, smart risk-taking, and strong execution. ADI has always excelled in these areas, and we look forward to driving outstanding value for our stakeholders in the quarters to come. Now, important that he's saying, as the CFO, stakeholders, and not just shareholders. Stakeholders being employees, partners, customers, and shareholders. So he's saying, look, challenges, kind of what Vince is saying, but the model has prepared us to take advantage of opportunities. So business cycles go up and down. We are in the down part. We're ready for the up part, and ADI is ready for the up part. Why? Fiscal discipline, execution, smart risk taking, all those things. So the investment in technology and innovation, the flexible manufacturing, their hybrid manufacturing model, and then making those hard decisions when we need to make hard decisions so that we are prepared for the future. So you see this repetition of this message over and over and over again. Couple of the main points. We're looking ahead. Now, how can we look ahead with optimism? Because we've got the financial model, and we've built in resilience there. We've made tough choices. We're going to continue to act with discipline. Our business model is flexible and resilient as well. We've executed on that. It's positioned us well. Our product portfolio, part of that business model, and I'm just call out there, product portfolio meets short and long-term needs of the customers, which means as the cycle grows, we can take advantage of not just the overall economic cycle, but some other trends that are going to accelerate our growth. And that's why we're investing in innovation and technology. So we continue to execute on the model with discipline, and that's why we can be optimistic about the outlook. All right, so we've got this message, assets and growth. We know why. We see this message coming over and over, the financial responsibility, the flexibility and resilience of the business model. Now what? What are the goals and trends going forward? Again, a couple of quotes here. So in closing, this is, again, closing, Vince's closing remarks here. I'm very proud of how our team has executed in one of the largest downturns the semiconductor industry has seen. Significant, right? Proud of how our team has executed. More importantly, I've never been more excited about how we're positioned for the future and what it holds for ADI. We're looking to you hear this over and over and over again. Here's again, Rich puts out, and they're going quarter by quarter, putting out guidance right now. Some companies will put out for the year, put guidance out for the year. They've decided to do quarter by quarter right now. So looking into Q3, we're seeing growth sequentially. So we're starting to see that uptick. We're looking at growth sequentially as a company, as well as all of our end markets. The B2B markets is what Rich mentions here. We have an operating margin target that's actually a little bit of an improvement over where we've been in Q2, but that's a strong operating margin. If you know about the greater market's like a 15, 16% operating margin, maybe a little bit lower this year, 15% operating margin. And Analog Devices has done a number of things over the last couple of years to really firm up those margins, and they're doing it again. And then executing again on profitability and adjusted earnings per share of about $1.50. Yeah, they've built in a little bit of a cushion there either way, right? We can overperform or underperform by $100 million, and that's within the range, and that's typical. I'm not worried about that, but these are strong results. So their goals are to have strong, improving results. We've seen the downturn. Now it's time to return to growth. We're going to continue to execute on with discipline. So we want to keep looking at that. And then continue investing in the long term to take advantage of secular trends like AI. Now, there's a question in the Q&A. If you would make sure that you put it in the chat box, we're monitoring the chat box. And if I miss something, either Brooklyn or Bailey or part of our team will help me get back to there. The question is no doubting ADI, but how can I figure out if the scripted part of the call correlates with the data? And there was a couple of questions that are asking about that. In fact, let's get to the questions right now. Questions or concerns raised by the analyst community. Here's one. This is from Citigroup. Can you talk more about the gross margin drivers from here? Maybe touch on utilization rates, inventory trends, and some of your competitors have talked about pricing returning to historic norms. If that happens, can you still get gross margins back to the previous peak? Other questions were about pricing and margins. There were a number of questions, probably by far the most questions around pricing and margins. That's that profit aspect of it, but also looking at changing customer demands. So inventory levels, what's happening with your customers now? Analog Devices sells a lot of their products through distribution, so sometimes you might see a little bit of a lag because your distributors are holding a lot of inventory levels. Now, one of the things that Analog Devices says is like, hey, let's pull back on that. Let's hold that inventory closer so we can better monitor the demand that our customers have and demand out in the marketplace, so we don't get caught with having too much inventory and not being able to move fast enough. So what's that changing demand look like and other opportunities for growth? So actually one of the things that they look at is the thing called PMI. So the producer managers, the procurement managers or purchasing managers index, right? So that's a measure. It's a survey that goes out every month, and it's a measure of what's in the supply chain right now. Where are they moving? What strategy looks like? So they're looking at that, and they're starting to look at some very positive indicators there. Typically, is a little bit of a leading indicator for economic growth. Talks about employment and what they're seeing. So that's one way of looking at it. What are the economic data? What's the economic data saying about it? But also, what is the financial data saying about it? So with that, we've got this message, very optimistic, careful, but optimistic because of the business model. Their focus is to continue executing on that business model so they can return to growth, not just return to growth, but take advantage of some trends out there like AI. And I'd be remiss to not talk about AI. They did talk quite a bit about AI as an example of how they've made investments in the long term and the short term to take advantage of that and where their products are going to be needed within the AI trend, and obviously AI being one of those accelerators. So they feel very strongly that they are positioned not just to return to growth, but also to accelerate that growth. Now, Sudhanshu, if you've got another comment, happy to take that question. If there are other comments, happy to take or questions, please in the chat box. What I want to hear from you is, given this message, maybe you listen to the earnings call. What are your feelings about the comments and the messages you're seeing here? How do you feel about it? What do you think? So in the chat box, just go and leave your comments there. But Sudhanshu's got a good question. Like, what are the results? So let's take a few moments on the results and a couple of things that we can look at. Remember, in Q4, they said, hey, look, downturn. In Q2, we said, yeah, this is probably the largest downturn that we've seen in a long time. So this is a tool that we use to measure the financial performance. We call it navigating the financials. Yeah, what are the tough choices? So typically when you hear tough choices, it's about expense management. In fact, they did talk about expense management and disciplined capital allocation or disciplined expense management. So they've had to cut costs. And they've had to be able to flex their costs with the revenue. So we'll take a look at that. We'll take a look at revenue growth and profit growth and see if they've been able to flex much. All right. Why don't they directly say their investment in people, process, and technology, or if layoffs or employees are needed? Yeah, Daryl, good question. So they do. I'm just summarizing some of these. If you go and look at the details of their comments and then go into the reporting and take a look at some of their disclosures there, you'll see more detail about the decisions that they've been making, made big investments into AI. They're making big investments into other, for example, automotive and the additional electronics the different customer experience that you and I are actually seeing in automobiles right now, from battery management to sound systems to sound management, all those things, they're involved in all of that. So they're giving examples constantly about the investments that they're making. They also here's our R&D spend for the year. What terms indicate future layoffs? Yeah. So one of the things that you'll see is when companies talk about expense management, sometimes, or a lot of times actually, they'll talk about reductions in force or layoffs. So if I'm looking at a potential for continued cost cutting, I'm going to look for a couple of things here. For example, I'm going to look for revenue growth declines, right? Revenue declines would be a good thing. Like, hey, they're going to have to manage expenses. I'm going to look at margins and what way are margins going? Are they stable? Are they shrinking? Or are they expanding? What's their goal? If they want to hit a 40% margin on operating margin, okay, what are they right now? So there are a couple of things here that will help me see that on this navigating the financials page, but there are probably a couple other ones that if we were to do this for your company, we would customize this sheet to get those key messages and those key indicators. Let's see what other questions. Sorry if I missed something, but can I find these pieces of information in Ticker Fool, etc.? Yes. So you can find Analog Devices is really great. So if you go to their Analog Devices investor relations page, and you go to the financial information and look for quarterly results, they have the 10Q, which you'll need for the financials part of things. They have the transcript, which is great because now I don't have to go to Fool or Ticker or Seeking Alpha to find it. They've got it right there. And a lot of companies will actually make some edits to that to more closely follow what their script was saying. Sometimes the audio gets garbled. Is there a preparation link for this course? Please send it to register to attend. Yeah, so there are a couple of things that we can do. We can send you, there are a couple of choices to you. Also, if you want to talk more about what we can do for you and your company, feel free to email one of us or message us in the chat box, and we'll get you some of the things resources you're looking for. Thank you. What are the red flags someone needs to pay attention to in an earnings call? Yeah. So red flags, again, we're going to look at that. So let me show you a couple of things. First of all, they say they're making investments. So my question is, do you have the cash to continue making the investments? So first thing here, you see right over here, cash and cash equivalents is one of those first metrics that we're looking at. That's the cash that they have right now to spend. We're going to look on the balance sheet. So if I flip over, here's their balance sheet. Now, typically cash for a US-based company is right there at the top, all of their liquid assets. Now, you might just look at cash and cash equivalents, and that every company is going to have. Some companies like ADI, common in the semiconductor, common in the tech world, are also going to have short-term investments as part of their quote-unquote liquidity. In other words, the access to cash that they have. So if you're going just by this tool, they had $1.9 billion in cash. So I'm going to put that up there. Now, 1.9, they're going for about $12.5 billion. So that's 17% of their revenues in cash. That's a healthy cash position, especially coming out of this downturn. The other thing to look at is, okay, so how are you generating cash? And that's where you're going to look at cash flows from operating activities. So here's their statement of cash flows. It's set into 4 chunks. This first part is their operating activities. So I'm looking for net cash provided by operating activities, and there's another 1.9 billion. So this is within the first 6 months of the year. So 1.9, almost $2 billion in cash generated for the first half of the year. Not too bad. Again, on $12 billion in sales, roughly $12 to $13 billion in sales for the year. Okay, so that's pretty healthy cash and cash flow. Do they have the capital that they need to continue investing? I would say probably, right? It certainly looks like that. Why isn't free cash flow on navigating the financial spreadsheet? Yeah, Robert, good question. This is a very general one. So not every company looks at free cash flow. And for those of you who are wondering what free cash flow is simply our cash flow from operating, that 1.947 minus capital expenditures. So what assets are they buying, basically? And so what's left over, you can use to pay dividends, buy back shares, buy other companies. And that, for some companies, is a very important one. Analog Devices does talk about free cash flow. This tool is made more broadly. Again, we will tailor this to our customers when we're doing workshops for each of our customers. And so if you want us to come do training for you, we would absolutely look at modifying this and customizing it to what the company is looking at. Which companies or industries focus on free cash flows and which don't? Tech tends to. There are a lot of companies, if they're making large capital investments, tend to focus on free cash flow. But then again, free cash flow has been one of those metrics that a lot of companies are looking at. A lot of times investors will ask about it because they want to know what cash is available to pay out in dividends or buy back stock or even accelerate growth through mergers and acquisitions. So I would say most companies that have a large capital expenditures, do a lot of M&A in their industries, are going to be looking at free cash flow. And that'll change. All right. So it looks like they have enough cash. We're talking about coming through a downturn. Now I've got to look at revenue. Do we see the results? What are we seeing recovery? Now we're just going to look at one standpoint. Yeah, you're welcome. One data point to see what we can see here. So here's our total revenue. We're going to get and net income and net profit margin. We're going to find that all on the income statement. So revenue is another name for top line. So that 2.159. Net income is down here. It's the bottom line. So that $302 million, and the net margin will compare them. So here's our revenue, 2.159. Great. Down. I want to look at revenue growth, and we'll jump to that here in a second. Net income is at 302. And if I do the math, it's about a 14% net profit margin. Now, I would expect this to be down a little bit because of this trough, but I also expect them to continue to manage with discipline, like financial responsibility. Couple other things as I'm looking at that. Assets, that's what I'm going to look at assets to figure out if they've got the financial strength to get through this downturn, as well as how well are they utilizing their assets to deliver results, to deliver profit, and then growth will tell me a little bit more. So let me just fast forward here. Now, the other thing here is I'm looking at analog devices. We talked about that downturn. I said, go back and look at previous quarters. Here's a full, when we're monitoring progress, here's the full year performance. And here's where we're sitting Q2. Now, let me take a quick word about revenue growth. And this is, you can't see the negative in there, but it's down by a third. Okay. They mentioned this has been one of the largest downturns that they've seen in the semiconductor industry. They were up $12.3 billion last year. They had pretty strong growth or decent growth from 2022 to 2023. And I believe their fiscal year ends in the end of October. And then this second quarter, so Q2 of 2024 versus Q1 of 2023, they're down by a third. They went from $3.3 billion to $2.2 billion in revenue. That's a pretty aggressive downturn. Yeah, so I would say that's it. Now, the question was the disciplined financial decisions. Are they making tough decisions? Now, some of those, when you're looking at the cost structure, some of those costs we can cut. Some of those costs will flex with varying demand, and that's what most companies try to do. Is if our revenue is down by a third, we should try to get our costs down by a third as well to maintain things like margins and things like our growth. So, a couple of points to look at as I'm looking at their message. First of all, up here, net margin for the full year down by a lot, almost half of what it was before. That means costs have gone up relative. And I can confirm that here, where the top line is down by a third, but their bottom line is down by 2/3, which means they weren't able to cut costs. Now, if you think about ADI and their message, maybe that's on purpose. Remember, they want to continue to investing in tech and innovation. They want to continue investing in that customer engagement. They've got to have the expertise. And right now, you don't want to lose expertise because when you go get it back, it's going to be super expensive to try to get it back. So maybe this is a strategic decision to flex other costs where we can and preserve what we need to preserve. Now, if that's the case, and I'm going to have to go back and think about that and look, maybe ask questions about that and talk to my coworkers and get their perspective on that to see what they're seeing and to make a better judgment there. Question: why do companies follow different fiscal years? What determines their respective fiscal year? It can be a lot of things. Like think about Walmart. Walmart's the largest retailer in the publicly listed retailer in the world right now. Their fiscal year ends end of January. If they tried to end in December, that might be really tough just administratively, and they would miss the full impact of that holiday season. So partly one reason why companies have different fiscal years than the calendar year is to go with their seasonal trends. Another reason why might be just tax tax laws and tax years. Different countries have different tax years, so maybe to better reflect and make things a little bit more, again, administratively easier. Maybe that's another reason why companies do it as well. Seen both of those. Yep, you're welcome. So you see a little bit, which quarter's earnings statement does this reflect? So get to this first one is the most recent one that they released back in May. So Q2 of 2024. And then I've compared it to 2023, and that's one of the reasons why we're looking at. I could go compare it to Q3 of 2023, Q2 of 2023. But one of the things I wanted to do is look at, hey, Q4, this is what they said. Great record years. Now we're seeing a trough, and now we want to prepare for that. And so that's why I chose the full year of 2023, just to see where they were before. We can also look at how they're doing to other companies. So maybe like NVIDIA, big player out there right now, maybe needing components from Analog Devices. Obviously super invested in AI, and they're kind of ahead of the game. So now you're looking at that. Well, man, the message of optimism for the future and in heavy investments into AI. Well, NVIDIA's knocking it out of the park. That might be Analog Devices and some of that opportunity for Analog Devices. Can you share the spreadsheet, please? We're engineers after all. Yeah, this is going to be in the tool that you can get, and then all it is finding the right line items on the quarterly earnings call. And if you've been to one of our workshops, you can actually go onto our learning resource and request a customized one for those of you who've been through our workshop as well. NVIDIA, by the way, they're in their 2025 fiscal year. I also took a look at, I'm running out of time, so I want to just kind of fast forward other opportunities. BYD might be one of their customers. Again, battery management systems, electronics within cars, EVs. Here's another place where they might see opportunities there. Yeah, thank you, Matthew. Appreciate that. And then also Honeywell on their industrial side of things might be one of their customers also, and take a look at what's going on there. So they talk about different end markets. I can use this to measure Analog Devices to the end markets, to customers, to peers, things of that nature. So we've been through the analysis. We've got kind of mixed results, but we can see kind of where that opportunity for accelerated growth is coming. There are some things that I still have questions about in terms of their financial performance, but now it's about the application. We've got to apply this knowledge. Part of what we do in our trainings is help you apply the knowledge. So given the strategy, given the performance, here are the levers that you have. What are you going to do? What's your impact going to be? What's the financial impact of your decision going to be? So we've worked with 34 Fortune 50 companies. Here's some results that a lot of our customers see: improved business performance, better collaboration and teamwork, better communication, better engagement. Those sorts of things are results of building business acumen and having that business acumen as a core competency in the one that we're going to develop. Again, so application: to know and not to do is not to know. So what are we going to do? Well, this part is set up just like the other part. So different sections, couple of insights. It looks like the business model works. So keep working the plan. I can see why, with their financial discipline and the business model that they've had, they're optimistic about the future. It also sounds like they're pretty well positioned for AI and other trends. They're not just focused on their own portfolio, but they're focused on that customer engagement. So they talk about design wins, where they're actually working with a customer to design in their products for a long-term life cycle. So what else do you do? Have confidence and go execute. So personally, what do I do? Well, if I'm working with Analog Devices, I'm going to compare them to peers and customers and their end markets, and see who's got good performance, see where ADI might be able to see some improvement. I'm going to work with my team and figure out what that better perspective is. Ask questions. Hey, what about this? What about that? Did you see this? What did you see I'm missing? Those sorts of things. And then work with ADI's employees to understand strategy, performance, and what levers they can pull to be able to have a positive financial impact. Now, where do we go from here? If you've analyzed your own company, go look for a peer, go look at a partner, go look at a customer. If you haven't analyzed your own company, go look at your own company. So lastly, as we're wrapping up today, again, 3 parts: prepare, analyze, and apply. Now that we've done the application piece of things, remember there are 3 parts of what you can do when you're preparing for this. What's the second step of the prepare process? Real quick, what's the second step of the prepare process? My challenge to you, again, as soon as this closes out for, 95% correct. Awesome. Appreciate it. Who are you going to go listen or analyze next? Carol's going to go do her company on August 7th. In the chat box, name a company that you might go ahead and analyze. Where can you find the tool? Well, as we wrap up, a couple of things that you can do. Again, our next earnings call webinar is August 28th. Thank you, Anthony. If you go look at acumenlearning.com/webinar, you can get the tool there. And I think we'll drop in a couple of other links there for you to help you out. Looking at customers, looking at competitors. Excellent. Hey, it's been an absolute pleasure being here with you. Appreciate the comments and the questions in the chat box. Again, if you ever have any questions, comments, challenges, let us know. We're here to help you out. These tools can help you. It's going to help build your influence, your credibility, career, and help the organization drive the results that you want to. Hey, thanks very much. Appreciate you being here today. Yeah, don't forget to get the workbook. Don't forget to follow us on Instagram. Not Instagram, on YouTube. Like, subscribe. Appreciate you being here. Happy to stay a little bit longer and answer any questions that you have, but appreciate your time today. All right, everyone. Not seeing any questions. Appreciate you being here. We'll see you next time.